Tonight, a look back at the 2008 banking collapse and the cost of greed. The ticker reads, government announces trillion-dollar bailout, unemployment at record highs.
In 2008, while the world's largest banks were collapsing, governments were printing trillions to save a failing system, a mysterious white paper appeared on a niche corner of the internet. It didn't come from a university or a central bank, it came from a ghost. Welcome to Trading Big X. This channel is all about decoding the economy from the ground up. No noise, just say. What if money didn't need a government to give it value? What if you could send $10 million across the globe in 10 minutes for the price of a cup of coffee without asking a single bank for permission? But here's the real question we're asking today. Is Bitcoin a revolutionary solution to a broken system? Or is it the most expensive failed experiment in human history? By the end of this video, you won't just understand what Bitcoin is, you'll understand the structural problem it was built to solve and whether it's actually delivering to its promises. If you're here, it's because you aren't looking for get-rich-quick schemes. You're here to understand the mechanism of money, markets, and the system that runs our world. Before we dive into the first principle of Bitcoin, do me a favor. If you believe the current financial system needs a fundamental reset, hit that like button. If you think the system is just need better regulation, let me know in the comments. 4 fatal flaws of modern money. To understand the Bitcoin experiment, you have to understand the laboratory it was born in. The current fiat system has 4 fundamental bugs. The inflation tax. Modern money is debt-based. To create money, a central bank must issue debts. This leads to an ever-expansion in supply. Think back 5 years ago. What is one thing you used to buy that now feel outrageous expensive? Is it rent, X, insurance? Let me know in the comments below. So what is the Bitcoin solution? Hard-coding scarcity, 21 million Bitcoins, no more than that. It's an attempt to create the digital gold. The trust paradox. We're told the system is trustless, but it's actually trust heavy. You must trust the bank to stay solvent. You trust the government not to weaponize the currency. You trust an intermediator to let you access your funds. Bitcoin replaced social trust with mathematical proof. Checkpoint problem. Traditional finance is a series of gates wall. If you live in an emergency market or if you don't have the right ID, you're locked out. Even in developed nations, your account can be frozen for suspicious activity. That is often just you trying to move your own money. The speed gap. We live in an age where information moves at the speed of light, but value moves at the speed of a 1970 mainframe. Why does a bank transfer take 3 days? Because of the settlement layers? Bitcoin attempts to collapse that layer into a single global ledger. The promises versus the reality. So that's the problem. But does Bitcoin actually solve it? Let's look at the promise versus the state of the experiment. Digital scarcity. This is the big one. For the first time in human history, we have something that is digital but cannot be copied. This is the Byzantine general problem solved. It promised a world where your savings can be diluted by a policy change in a boardroom you weren't invited to. Decentralization and the off switch. Is it really unstoppable? With tens of thousands of nodes worldwide, Bitcoin is the most resilient computer network ever built. But is it really decentralized? Is a few mining pools control the power? Let's discuss this. Do you think a government could ever truly shut down Bitcoin? Or had that ship already sailed? I want to see your theories in the comments below. Self-custody, the double-edged sword. Bitcoin promises to be your own bank. That sounds great until you realize banks provide a service. They protect you from your own mistake. In the Bitcoin experiment, if you lose your private keys, your wealth is gone forever. There is no forget password button in the blockchain. Are we as a society ready for that level of responsibility? Share this video with a friend who always loses their car keys and ask them if they trust themselves with their life saving on a USB drive. The the experiments continue. We have to be honest here at TradingBits. Bitcoin is still highly volatile. It's still hard for the average person to use it, and the regulatory battle is only just beginning. But here is why it matters even if it failed. It has forced the world to rethink what money is. Central banks are now scrambled to create their own digital currency, the CBDC. Why? Because the Bitcoin experiment proved that the old way of doing things is no longer enough for a digital first world. We're moving from a world of human-led finance to algorithm-led finance. So, is Bitcoin the solution? It's a tool, and like any tool, its value depends on how you use it. But Bitcoin is just the beginning of a much larger shift. If Bitcoin is the money experiment, what happens when the experiment meets the rest of the economy? In our next video, we're going to take this a step further. We're moving from the money itself to the market it powers. We'll discuss the future of money and markets, how automation, AI-driven trading, and a structural shift in digitalization are changing the way nature of how we build wealth. You don't want to miss it, because that is where the experiment becomes our reality. Make sure you subscribe and hit that like button. We're building a community to decode the economy from the digital world. And remember, money, markets, we're trading the future. See you in the next one.